Good evening, dear colleagues. As always, it's Sunday, and as always, it's Forex Times with Strelkov here. As usual, I'm inviting you to join the community Forex Times. There you'll find forecasts based on data from the Chicago Mercantile Exchange, strategic target levels, and triangles as penultimate waves. All these publications can be found in the community Forex Times. You'll also get trading recommendations and individual consultations. And of course, there's a chat where we can all communicate together. All of this is aimed solely at achieving profit. So come on in, you won't regret it, dear friends. Now let's traditionally get started with Euro, gold, and the SP 500 index. We will consider the Euro exclusively within the framework of buying. However, let's start with the fact that according to the Commodity Futures Trading Commission, we see an increase of 3%, which tells us that the uptrend remains intact, with buyers increasing by 3%. The uptrend is likely continuing with the formation of an initial diagonal triangle within a 5-wave structure. Now, a few questions. The first question is whether the corrective decline has ended and growth has begun, or whether the corrective decline will continue. The second question is, where is our strategic target level? And the third question is, if the correction continues, where is the level from which we can consider buying? So let's start with the first question concerning the correction. In essence, we had an impulse and entry into the triangle through a flat pattern. Here is our flat correction structure in wave A, B, C, D, and wave E of the triangle from which we began to rise. So in this global structure, we have a diagonal triangle, which is likely an initial one. And therefore, friends, the thing is that if the correction has already ended, and with initial diagonal triangles, there's always a problem. We don't know whether the correction has already ended, just a second, or if the correction has ended and growth is continuing, or if the correction will be deep enough before growth resumes. In initial diagonal triangles, this happens very, very often, that there are very small corrections. However, in our case, there is one small but. This is the resistance range, the strongest resistance range, which is very close. This is the market maker's loss level, which is the upper boundary of the market maker's call range. At this level, with a high probability, futures contracts are opened for sale with maximum volumes. This range is the strongest resistance range. If the price enters it, there are usually 3 options. Either the price breaks through it but quickly returns, the price stops at it, or of course it bounces back in the opposite direction. Therefore, friends, at the moment, I am inclined to suggest that we may still see the continuation of the correction, specifically to the market maker's loss level, the lower boundary of the market maker's range, from which we will then consider buying, and we will consider buying in the direction of the target level of 118, where you can clearly see the accumulation of call option contracts worth 464 billion on weekly option contracts. This is quite a large accumulation for weekly option contracts on the euro with a capitalization of $215 billion. Therefore, friends, once again, we wait for the price to drop to the market maker's loss level, or we wait for a correction impulse, and above the impulse, we enter the market with a buy stop order targeting 464 million at 1.1180. I suppose that while the price is correcting, the call option hedges will adjust their positions precisely to this level. That is, they will adjust their expectations, as we have seen many, many times before. For example, let's not go far. We recently had examples. Yes, absolutely right. Here is the accumulation of net option contracts. 422, 274, 137, 274. And here is the call option hedger. You see, they are sitting here waiting for the price, the same with the 120 million hedged options. They waited for their price. Thus, when the option hedger, this is our maximum open interest in option contracts, lands, so to speak, right at the level of these large accumulations of option contracts, it serves as a trigger for us that in this direction towards this target level, it would be a very good move. Therefore, the plan for the euro is clear. Regarding golds, unfortunately, I have to say that we are strategically considering corrective sales. Despite the fact that according to the Commodity Futures Trading Commission, there has been a 14% increase in buyers and a 12% increase in capitalization, reaching $406 billion and $154 million. If we look at the MD oscillator and check the divergences, we can see that on the weekly time frame, there is a divergence. On the monthly time frame, we have a divergence. And on the daily time frame, we also have a divergence. You won't believe it, but even on the 4-hour time frame, there is a divergence. No matter how you look at it, these divergences are evident. Moreover, I can tell you that there is a slight indication from the contracts that buyers may still want to test the level of 25.30, which is the market maker's loss level and the upper boundary of the market maker's range. From this level, a decision can be made to enter the market for a corrective decline. On monthly option contracts, I don't see such bullish optimism because the price had already surged on Friday during a sharp movement after spending the whole week near the market maker's loss level. Currently, the price on monthly option contracts is already in the strongest resistance range. Furthermore, two strategic levels have formed, 2400 and 2410. Please take a look. $774 million, $898 million, $981 million, and $171 billion. These two target levels will very likely be tested by the price in the near future. Therefore, with the expiration of monthly option contracts on August 27th, if the price remains within the 2500 range this week, or maybe even tests 2530, then at the end of this week or the beginning of the next, we can expect a reversal due to the formation of strategic levels. This is also due to the fact that before expiration, the market will most likely defend its money. Since the price has moved outside their profit range, if expiration were to occur now for gold monthly option contracts, market makers would incur losses. Market makers do not like losses at expiration, and if they have any strength, they always try to prevent it. We can hope they will act the same this time, especially since we know approximately where the monthly balance level will be. Currently, it is almost at the 2400 level, where the accumulation of strategic target levels is located. It might stay here until the end of the month or rise to 2410, and this would look quite attractive for the market maker to work out their maximum profit level. So that's the plan. Yes, friends, if you are going to enter a sale on gold, I urge you to do so exclusively using patterns, either NBA or impulses and corrections from the perspective of Ralph Elliott's wave theory, or any other patterns you may use. I personally use only two, but there are many available online. You can take any free trading strategy. And if you believe the strategic levels of 24.10 will be reached soon, you can simply use any trading strategy. If it tells you to sell, then sell, but do not forget about proper capital management and setting levels. And now about the S&P 500 index. We are currently in an uptrend and have received the correction. You might think, what should we do here? Well, if we have a global uptrend and a correction occurs, what comes next? Correct, a continuation of the impulsive movement in the direction of the trend. Therefore, this is where the impulse should occur, and we are eagerly awaiting it. So what do we see? Well, yes, theoretically, from this point to this one, I've drawn the impulse. 4, 5, 6. Oh, yes. Let's assume this is the correction. Fine, this candle can be ignored. In terms of the wave, we need to depict the impulse here. And as we know, there are two types of impulses, either a 5-wave structure or an initial diagonal triangle, each with its own rules. The 5-wave structure doesn't fit here at all, But what's most interesting is that I counted the waves, and the hypothetical wave 5 is larger than wave 3, which cannot happen in an initial diagonal triangle. Furthermore, I think the hypothetical wave 4 is larger than wave 2, which also cannot happen. Let me check, but I believe that's the case. Yes, absolutely correct. Wave 4 is indeed larger than wave 2. And that's the whole arithmetic. There is, of course, the possibility of an impulsive structure in the form of an initial expanding diagonal triangle, but that also doesn't fit here. So, friends, during the week, I will be writing that we should exclusively look for and consider selling opportunities, again, only based on patterns. The best scenarios occur when it's on an NRA with liquidity being worked out, or on an impulse. Impulse, correction, entry into the market with a pending sell stop order. Alternatively, a pin bar forms when the market reverses, with liquidity being worked out that's located above the local maximum value. This means that all the buy orders are triggered by this movement, after which all these buy orders are absorbed by a professional market participant with a large volume, thereby forming a pin bar, which is a very good setup for continuing to sell. Thank you very much, dear colleagues. Honestly, I'm not sure about the S&P 500, but we have a very good plan for the euro, and new strategic target levels have formed for gold, which I will definitely write about tonight in the community. Those are 2420 and 2410. So once again, I traditionally invite you to the community. Come take a look. I'm sure you'll like it. That's all for today. Thank you very much. This was Den Strelkov. Bye-bye, everyone.